May profits be upon you. Welcome to another weekly Forex forecast. You're getting the whole shebang in this one video. All right, I'm going to give you analysis for all of these markets, and we're going to start out with the US dollar index. And actually, we're going to start with the news, the economic calendar for the upcoming week. What are we looking out for? High impact news. What is high impact news? CPI is high impact news. NFP, high impact news. Interest rate decisions, high impact news. All right. And what do we have this week? On Monday, we have the Aussie interest rate decision. All right. So be careful of that. Tuesday, we have nothing. All right. There's nothing going on. So this will be a low probability environment to trade in, highly volatile. All right, because it's unpredictable, not a lot of volume. That's why. All right, it'll be herky jerky. Watch out. All right, Wednesday, you'll see US dollar has core CPI, very important, and this is a CPI. The CPI lets us know what the how inflation is right now, and if it comes in hot, that means the Fed may cool off on talks of cutting interest rate on the very next at the very next meeting. So something to watch and be careful of. Do not be in a trade at that time. All right, 8:30 a.m. Eastern Standard. We got the Bank of Canada. They have an interest rate decision 9:45 the same day. On Thursday, you see the Swiss National Bank is going to have an interest rate decision to announce, and 8:15 the same day. That's at 3:30 a.m. At 8:15 EST. You have the euro. They're going to have a monetary policy statement to make, and on Friday we'll have GDP by the pound. So we have a good week of volatility, some good volatility. All right. And I'm looking forward to it, to be honest with you. All right. Now let's get to business. Let's look at the Dixie. All right, the US dollar index. This is the bellwether for the rest of the markets. All right. If the US dollar index shows weakness or strength, all right, that'll let you know how you can play the major pairs, not not so much the cross pairs, but the major pairs. Anything crossed with the US dollar, right? Trading against the US dollar. So let's look at it. All right. This past week, looking at the weekly time frame, you can see this past week closed as a doji, right? It opened. You saw some carry through from the previous week, which is a very aggressive bearish candle, but then it turned around, and then the seller stepped back in and pushed it back down, squeezing it down to that small body. This is very indecisive. All right. But what we will notice is that it came down into a weekly fair value gap. This is a weekly imbalance here, and price came down into that aggressively and stayed there. Did not trade through or pierce the bottom as yet, but this is early in the process. What happens is I'm looking at more bearishness to come because we had such a long bullish impulse move that it's time for a pullback. The whole point of bringing price up here by the market makers was to take this high, not just that high, this high, this high, this high. Took all of this liquidity, took it all right? Anybody who was taking shorts, they had stop losses here, stop losses here, stop losses here, swept all of that, and now we can pull back. Now we can pull back. Are we going to head towards the bottom? It could happen, but that's not what I'm planning on. I'm just planning on a retracement at this point. All right. Maybe you want to put your Fibonacci on this and say, okay, maybe price will go to the fair value gap that crosses over the golden ratio or 705 or 786 levels, whatever. You can do all of that later. All right. It's going to be a while before it gets down there. Right now, I'm looking for longer term bearishness. But what about for this week coming up? All right. We already have a bullish candle, but it's a doji. All right. I am looking for price to continue to react to this that weekly fair value gap, and there's a daily fair value gap inside of that weekly fair value gap that prices come into. And the deal is, this is one of my favorite, most recognizable patterns when I can draw it. All right, we got the high, higher low, higher high, lower low. That's what you want to see. A break of market structure. This here tells me that there's more bearishness to come after a pullback. A pullback into what? This bearish leg of structure. You're looking for a price to go from external liquidity that it just took to internal liquidity, where that internal liquidity at a fair value gap or imbalance. And it's right there. And price came right to it. All right. You see it pierce it, but it never closed above that fair value gap. All right. And it relented and price started to push further down. Now, what did it do? What did it accomplish doing that? What you want to see is it took out an external low from an internal liquidity point to an external liquidity point. It also, in the bigger scheme, this is all inside this retracement, but the deal was it took out the external high and pulled back into an internal liquidity point. This is the natural flow of price. So there's going to be fluctuations in between that. All right. And you have to see that. All right. It went low, it went high, lower low into what? A fair value gap. It went into that imbalance and reacted. I'm looking for price to follow through with that next week. All right. Giving us some short-term bullishness. All right. Now, there's an incentive up here. All right. From an internal to an external liquidity pool. All right. And I'm looking for price to work its way up to there and then turn around again. That's what I'm doing. All right. That's why I got that arrow here. I'm looking for price to give us short-term bullishness for longer-term bearishness. I hope you get it. I hope you get it. This would be a great target for next week, in my opinion. Now, why do I have this exclamation point, in yellow, the caution? Because if price closes past this high, all right, I'll be looking for bullish fair value gaps to develop along the way. Let me use this pen. I'm going to be looking for bullish fair value gaps to develop along the way. And if I see a fair value gap, I'm looking for price to maybe tap into that and quite possibly to go higher. So this would be a key point for me of market structure. If price trades through it and breaks it, not just wicks up here and then continues down. If I see that, my bias changes. All right. But barring that, I'm looking to see how price climbs up here. If it leaves bullish or bearish fair value gaps or whatever, or is it wicking? And then will it, if it does take that, will it give me a bearish engulfer and give me some bearish imbalances along the way? So you got what I'm looking for. All right. Now, let me see if I can get rid of that. Yes, I can. All right. So I'm going down to the euro, which is the inverse of the US dollar index. It's, they run negatively correlate. They're negatively correlated. All right. The euro is bearish. All right. And It looks like it wants to turn here. It looks like it's trying to, but what it did, it traded up into this weekly fair value gap. All right. And it did not close above market structure just yet. I want to see a close above market structure. And I want to see if price gives us a uh-oh. Okay. Okay. I guess I'm not going to get that pin back. What happened to it? There it goes. All right. Can I get a writing utensil? All right. I guess there you go. I don't know why why is it all of this necessary? All right, I got it. All right, I got it. All right. Anyway, can it go away? You know, it just, I'm finished with you. All right. I don't understand. All right, there you go. Oh, damn. I'm sorry, y'all. All right. So what I want to see is if we get the bullish fair value gaps going up into the consummate encroachment, the 50% of this uh, bearish weekly fair value gap there. And we'll see. We'll see how it goes. But I'm looking for price to start to give that that short-term bearishness. I want to see short-term bearishness enter here because of the short-term bullishness in the US dollar. All right. And that strength. I want to see price come down here and sweep. As soon as price sweeps down here, this is why I got this uh exclamation point there. If price sweeps this low, I'm going to immediately start looking for longs because I believe this is the beginning of the correction for this, the beginning of the pullback. Right. So a sweep here, I'm automatically going to start looking for longs, but we're going to have some short-term bearishness. And I'm sure some day traders are going to want to take shorts on the lower time frames. Be careful, but I do believe that is coming. All right. If we get a sweep up here, all right, once we get a sweep up here, which are shorts good to look for? Yeah, but I would wait for those the sweep before I look for those shorts. That's what I would do if I'm going to day trade it. But the longs are the ones that you don't want to miss. I'm looking for longs. All right. It may not come all the way down there. It may take this one. All right. It may take that one. But as long as I see a break of market structure to the upside, I will look for the pullback and then take that high probability trade to the upside. That's what I'm looking for. Okay. You tell me what you're looking for in the comment section. I would love to hear from you. Let's see. If we go to the pound, all right, pound has got a similar situation, right? A similar situation. Why do I have an eye up in there? Because I'm watching these levels here. I'm watching these levels. I got an exclamation mark for the same reason. If price, once price comes down, once price comes down here, I'm going to look for bullish setups to come up. This is why I don't use the trading view one because who wants to see that? All right. So if price price taps into this bearish fair value gap on the daily, once again, I think that'll be the time to look for shorts on the smaller time frames. But you want to look for those bearish fair value gaps for price to come back into so it can reach lower prices to take that external liquidity out. This is internal, remember, the fair value gap. So an external low, and then we'll seek higher uh 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 longer term bullishness. And I'm looking for those imbalances along the way for price to come back to and then continue higher. Ultimately, I think this fair value gap here is going to fail. Ultimately, I suspect it will, but we let price dictate. Okay. We don't jump ahead into just willy-nilly. All right. So we have the Aussie dollar here. All right. It's been very bearish, as you can see. What this is the only pullback that we saw, but it came back to touch those lows here, right? And continue lower. It came back again, pulled back into these lows here, that just to continue. I'm looking for price to continue bearish until it takes out this low. And if I can get my pen back, take out this low and cut quite possibly these lows. All right. Once we get a clean sweep, I'm looking for price. This is a long I don't want to miss. I'm going to be looking for my long setups. What am I going to be looking for? I'm going to be looking like this: a low, a lower high, a lower low, and then a higher high. Once it breaks this, I'm waiting for it to come back into this leg of structure for a internal, liquidity, a fair value gap, and go down to my 5 minute and look for my setup. I'm looking for the exact same thing: low, low, lower high, lower low, higher high. Once it comes back, I'm taking it and we're going hard. Okay. Hope that's easy enough to follow. All right. So with the dollar, I'm looking for short-term bullishness. So that accounts for the Aussie going down lower. But as soon as it takes these lows, as soon as it takes this low, whether it takes this low or not, as soon as it takes this low, I'm looking for bullish setups. If I get that bullish setup, I'm gonna ride this thing. That's it. That's the plan. All right. Let's go to the New Zealand dollar. What's my time look like? What's my time look like? I can't even see a clock. Okay. I have no idea what my time is looking like. I lost my clock. Doggone it. All right. So the New Zealand dollar is the same deal. All right. New Zealand dollar is the same deal. We haven't had a significant pullback. Look at these lows. They're right there for you. All right. I'm looking at those lows. So once you see how price took that low already, it's already starting. It came down lower, swept this low, swept that low. All right. Came down lower, pushing up, and it's giving the choppiness. Now, this choppiness, don't get caught up in that. All right. It's hard to navigate that choppiness, but I'm looking for price to sweep these lows, and I will get ready for a nice bullish run. Now, remember, I told you the Aussie dollar got an interest rate statement coming up, so be careful of that. Be mindful of it, and we'll keep an eye. Oops, we'll keep an eye on these lows here. All right, and we'll see how price reacts to it. But I think it's preparing to turn to the upside. That's just me, because we took these lows with all that liquidity. If we go to the Canadian dollar, all right, what do we got here? Get out of here. Go to the Canadian dollar. I got a big old eyeball on this one, right? Because look how bearish it has been. Just underperforming against the US dollar. All right. And what I want you to see is that we are very close to taking out this low here, right? Now, this low was made on the 26th of November. We have a very aggressive bearish candle as of Friday, all right, with NFP and all. All right. All I'm looking for is price to continue lower. And once it does, I'm looking for it to start to give me my formation. All right. Once it does this into a bullish fair value gap, I'm going to look to take it back up. All right. This is a lot of bearishness. It's time for a pullback, a significant pullback, maybe to test these lows. All right. Now we've tested them over here, but this looks like the spot. I just want to take a peek real quick, real quick. It's not that quick on the weekly, and you can see how we're filling this wick. That's a very bearish indication. All right. Once we take that low, we fill the wick where there was a strong presence of buyers there, right? That's a very bearish indication. Are we coming towards these lows? This is why I have the 50% of this wick here highlighted. Let me bring this all the way over here. All right. That big wick, if price comes down to that bullish, comes down to that 50% of it, of that trading range, I will look to see how it reacts there, but I don't want to miss a long from these depths. All right. This is an extended market and overextended market, and I'm looking for it to turn around. All right. I'm not going to just jump into anything. I'm going to let price action give me guidance. Now, that was the Canadian futures. This is the Canadian dollar. This is US dollar, Canadian dollar, USD, CAD. All right. As you can see. All right. And this is going to be just the opposite of the analysis I gave you. All right. You can see price filling in that wick. I'm looking for price to fill that wick, take out those highs. All right. And attack this low resistance liquidity over here. Let me see if I find it. There you go. All right, there, I got it up there. I got it right. All right. Low resistance liquidity, so price will find it easier to continue to take this high, maybe to that swing high here, and then start turning around. I got my eye on it. Now, this is an area you want to keep your eye on for sure. And if price breaks that low, if price doesn't take this high out or takes this high out, if it takes this high or doesn't matter. If it breaks that low, that's when we're turning bearish and we're probably heading down. All right. I got my eye on that low. All right. Let's go to the Swiss dollar. A Swiss dollar. Not the Swiss dollar, but the Swiss futures. All right. Swiss franc futures. All right. And you can see it's been very bearish. It looked like a classic inverted head and shoulders here, right? But there is a weekly fair value gap here that price has traded into, and you see that respect given to that candle. All right. And there's a bullish fair value gap under it. Now, I want to see, that's why I got the eye here, how price reacts to this bullish fair value gap. If it respects it and price goes back into this weekly fair value gap and takes this high, then I'm looking to see if it developed bullish fair value gaps along the way for price to come back into and continue higher, because I believe that this could signal a reversal. This could be the beginning of a retracement, maybe to these highs, and then maybe more bearishness, because it's been bearish for a minute, making these lower lows and lower highs, right? So could we see it again? Yeah, we could. We're gonna let the price action tell us what we're gonna do, but we have to watch, and I'm gonna watch to see how price reacts to this doggone bullish fair value gap there. That's what I want to see. All right. If the US dollar is short-term bullish, then price will come back into this fair value gap, and I want to see if it holds. All right, it'll trade in there, it'll trade back into this range. But if it holds, we're going up, and you don't want to miss it. You do not want to miss it. Got it? Like I said, I want to see if this one holds. I was going to put an arrow on it, but we got to see if it holds. If it doesn't hold, we're coming down to the previous weekly low, and depending on how it gets there, we're going to look for those bearish fair value gaps. We're looking for those imbalances for price to again, I'm repeating, we're looking for those imbalances for price to come back into that support lower prices. All right. Hope you're with me. All right. This is the US dollar Swiss. All right. US Swiss. All right. This is the exact opposite of what I just showed you. We've already taken out the sell side liquidity here. You see the big wick. I'm looking for price to see if it'll come back up in here with short-term bullishness in the US dollar and then turn around and continue lower. All right. We'll see how that works out. All right. Just bear in mind, this is the high of the previous week. It's the previous weekly high. Right. If we break that fair value gap, that becomes the target. Right now, these lows are our sell side liquidity target. Okay. Now, this is the Japanese yen. Japanese yen, man, it's been a wild ride. It's been very bearish. Then we turned it around. We didn't do it, but they did. They tightened up on their uh, increased their interest rates, and price pushed, and then we had another pullback to this low. So what did that result in? We have this market structure here, these high, a lower low, lower high, lower low, lower high. Then we break and close above, trade through this high. This is indicating further bullishness to come. All right. And what do I look for? I'm looking for price to pull back into this bullish leg of structure after it broke structure here. I'm looking for this to be traded back into for higher prices. And as you see, this is an external liquidity point. All right. And we found the daily fair value gap here as an internal liquidity point. Price came back into the weekly fair value gap, but I'm looking for price to penetrate deeper into that bullish daily fair value gap embedded inside the weekly fair value gap. And I'm looking for that to support higher prices. That's why I got that arrow there. So we're going to see what it does this week. Bear in mind, US dollar is going to show short-term bullishness. That would bring prices down, right? That's the logic. And once it gets down here, I'm looking for price to establish support and go higher. We'll see if this doesn't work out. If price doesn't, if this fair value area does not hold, and it forms bearish fair value gaps along the way, I'm looking for price to come down to that swing low. All right, so it would look something like this. And then we're going to see if we get some pullback or whatever, or we're going to get follow through. But that's a whole nother story. We got to see failure first. Right now, because we broke structure to the upside, I'm bullish. I'm short-term bullish here for a retracement. I'm looking for this retracement to take hold. I didn't mean to do that. All right, there you go. Let's go to the US dollar, Japanese yen. Now, again, that was yen futures. This is US dollar yen. All right, for those that trade FX pairs with FX brokers. This is the exact opposite. You see that it's the same situation. Higher, 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 low, and then we break market structure here with a nice down leg. I'm looking for price to pull back into the fair value gap so we can continue down. See how price reacts. That's why I got that eyeball there. All right. Now, let's go to the S&P. All right, we are in the equity markets. These are futures now. These are futures. All right. If we look at the weekly, look how it ended. Look how the week ended. Bullish. Nice. All right. You can see how price pushed up this week, and this particular week, which is November 4th, the beginning of the month. And then the next week, we pulled back into the area of fair value, and we've been bullish since. And created another area of fair value. So if price is to continue, it wants to continue. It has the support here. All right, it has the support here. That is a weekly bullish fair value gap. Yep. And I like higher prices in the even though we're at all-time highs, I like higher prices because there's no sign of bearishness yet. All right. I'm going with the trend, and the trend is your friend until the end, right? So I'm looking for last week's high to be our first target. And you see this 80% and 100%. That's of the measured move. All right. What am I talking about? You put your Fibonacci extension on it. All right. You can see you go from the low to the high. All right. And back to the low. I just moved it over here parallel to it. And you see, you can project where price could go. All right. This is 80% of this bullish move here. All right. This is 100% of the bullish move here from that swing low to the swing high. This is the swing low. Heck on it. I keep doing that. This is the swing low to the swing high, right? Put it here to that swing low. And you'll see this is 100% of the move. Got it? I hope you got it. Good. Oh, I didn't mean to do that. All right. So that's how, it's called the measured move. It gives us an area to shoot for when there's nothing to the left to base anything on. Gives us a projected target. Got it? I'm looking for 100% of that move. All right. You've seen me demonstrate that a couple of times if you've been watching my videos. All right. I got the same thing going on here on the daily. There's a weekly fair value gap. That price could, if the daily fair value gap that price has just traded into does not hold, I'm looking for it to come down here to the weekly. All right. But the daily is right there. And I think this daily should hold. All right. It was preceded on Thursday by a bearish candle. And you see the next candle, it tapped right into, stung right into the bullish fair value gap. And I'm looking to see if we see some follow through coming Monday. If we go to the NASDAQ, look at the weekly candle. This is how it closed. That's very strong, isn't it? Look how we broke that high. Look how we broke through. Very strong follow through. All right. And we're almost at 100% of the move. All right. You can see the move from here, the swing low to the swing high, back to the swing low, which is here. I just moved it over here to the left so that we can see it. You see the lines. All right. And we're almost there. You see how the Fibonacci extension tool can be helpful in that. Yeah. Okay. So I like that the extent of this candle is a very aggressive candle, and there's a good chance that we will develop a fair value gap on the weekly here. All right. Once the next weekly candle completes, right? But can we find bullish fair value gaps here for price to find support for higher prices? Let's go to the daily time frame, and we have that same situation that we saw with the S&P. We have a bullish fair value gap, price tapped into it, and you see the response to it. Very good, trading through the highs of the previous couple of candles. So I'm looking for more bullishness to come. We'll see how the next candle opens. I'm not bearish in this at all until price breaks structure to the downside, and we'll have that conversation at that time. I'm always updating. If we go to the Dow, you can see on the weekly we have a push higher above this high, creating an area of fair value. Price stings into that area of fair value with that beautiful imbalance there to sting into for higher prices, and we see the follow through. Beautiful, beautiful price action. All right. And then on last week, it closed bearish, and I gave you that heads up. I said I gave a bullish outlooks for the S&P and the Nasdaq, but I said the Dow is doing its own thing. It's got a fair value gap to come back into. I think it's going to consolidate and it's going to come back into it. That's exactly what it did. And it's still on its way to that fair value gap. I believe it's going to hit this fair value gap. I think this fair value gap is sturdy. I think it should hold and push prices higher. All right. The Dow does its own thing, but you see, when I see a swing high intersecting a fair value gap, all right, and price trades through that swing high the way it did and closes high above, when price returns to this breakout area, it usually holds pretty well. All right, with two confluences, the fair value gap and the swing high intersecting. This is an overlap, and I love to see those. So I'm looking for price to be bullish once it gets here. All right, it's going to be that, and we're going to look at those the previous weekly high as the draw on liquidity. Okay, let's go to oil. U.S. oil or WTI crude. All right, it's been hard to trade. All right, because you see it's narrowing. All right, it's turning into a really a what do you call it? Flat wedge or whatever it's called. I don't know, you guys. I can't remember what it's called, but it is narrowing, man. I don't like it when price narrows and it gets tighter and tighter in this consolidation. It's not very easy to trade. I look for breakouts. All right. Now, what happens here? We had a market structure break here. Price traded through that market structure break. So what am I looking for? This is the daily. I'm looking for price to develop fair value gaps on the lower or lower time frame for price to go back into and continue down lower. All right. But you bear in mind, take this caution. When price is in consolidation, fair value gaps don't always get respected. You see how well this one was respected here? This is driving me crazy. Let me use this thing. You see how this fair value gap here did price just traded right through it. All right. And then there's no fair value gap there. There's no fair value gap here. There's no fair value gap here. But I think we may be on the way to a bearish breakout. So what's going on here? Let me see if I can get rid of that. All right. All right. So I think this will be our target at these lows because they're relative equal lows. And it doesn't necessarily have to hit this one, but if it did, that'd be even better. But I'm looking for price to come down there for the sweep in order to start going higher. All right. But right now for this week, I'm looking for bearishness and I'm looking for price to sweep those lows. But I don't want to miss a bullish run, a break of market structure to the upside. That'll give me the signal that I need to start looking for buys. But right now I'm looking for sells. Right. If we look in this leg right there, that last candle, I'm looking for price to show a bearish fair value gap. And looking at there's one there. Could price come up to that bearish fair value gap and find resistance here to continue lower? That's what I'm looking for. I'm looking for that kind of evidence. All right. This candle did not take the low. All right. And this 1, 2, 3, 4 candles, it kind of chopped its way down. I'm looking for it to pull back and then continue down further. All right. You're not going to expect to see anything different on Brent. All right. We have the same bearish fair value gap on the 4-hour time frame. And you see how price kind of moves sideways. I'm looking for price to pop up here, find resistance, and then come down to take out that swing low. That is my draw on liquidity. All right. For the week. All right. If we go to gold, what we got in gold, man? Gold has been something else. gave me a very nice trade on Friday, of all days. All right, so if we look at the daily, what I want you to see is the obvious. Price is bullish. High, makes a higher high, higher low, higher high, lower low. Look at that. Market structure break. What am I looking for? I'm looking for price to come back up into this leg of structure, find the internal liquidity. All right, from an external liquidity being swept. I'm looking for it to go to an internal liquidity. And where did it go? It skipped right over. It broke right through that bearish fair value gap, took out the high of that of that the order block. This is an area of fair value. Took out that high, which is fine, and then dropped, but didn't give the follow through. What did it do? It went into consolidation. This is where you don't want to get involved in a market when it's chopping around like that. All right. So what am I expecting next week? I got one thing to look for: breakout. Here's the high. Sorry, didn't mean to do that. Here's the high. Here's the low. All right. I want to, the safest way to trade this is to wait for price to trade through this high and break above it. All right. I want to see a close or trade through this low, break above it or break below it with a close. That way I can look to see what in that leg was there imbalances that price could come back to go higher. Was there imbalances for price to come back into to go lower? That's it. Playing around in this mess will get you chopped up like chop suey. I got my eye on this level here. This is the previous weekly low. That's a great place to take a sweep. All right. I'm looking at the 50% of this wick here. That's why I got the little eye there to see how price reacts to this magic trend line I got here. Now, I don't trade trend lines, but I watched how price danced around this diagonal area of support and resistance. And there is no denying how price gets below it, comes back, retests, comes back, retests, does not close. All right. And I'm looking for little edges, little confluences. All right. So you see that little line that I got the eye on, I said that was 50% of that big wick. On this one, it's a low, an external area of liquidity. So, on the 4-hour, if I see price dancing here, it doesn't necessarily have to take that low. It doesn't necessarily have to come down and take that low. It could take this low. It's an external liquidity. I'll be looking forward to see if it turns around and gives me a signature that says we're going higher to the previous weekly high. That's it. But you wait until it breaks this kind of consolidation. Don't be silly. You want to be silly, you go right ahead. I'm not going to be silly with you. Look at silver. Silver is running a little stronger. Why do those lines? Oh yeah, I got the same lines still persistent there. Can I is there a way for me to get rid of them? Because it won't let me select. What is this? What is going on here? Golly, man. Why? All right. If I can get to the weekly, you can see that it's been choppy, the same way as gold has been choppy. But this one's a little stronger, right? Broke structure to the upside, took that high, pulled back into this bearish leg, right? What did we take? Took out these lows here into this internal leg, this internal area of liquidity, all right, from sweeping the external back to the internal, and now we're chopping. All right, that's the way it works on every. It's fractal, folks. It works on every time frame. All right, so you can see this area is an order block on a higher time frame, and it held. It was respected here, here. It never closed past the weekly order block here. All right, that's just something to make note of. But in the consolidation area, price is moving up, but it has not tapped. It hasn't tapped the weekly fair value gap yet. I am looking for price to come up into that. I'm looking for price to finally sweep these highs, mitigate this weekly fair value gap, and which would coincide with you want to, make sure you bear in mind that you're going to see some short-term strength in the US dollar, right? Short-term strength in the US dollar. So price will likely push down into this wick, maybe to the 50%, and then push up and then down. I'm looking for price to give me some signatures, right? But right now, it's hard to say, oh, it's bearish or it's bullish. No. Oh, what did I just do? I didn't mean to do that. Oh, here we go again with this. All right. All right. So be careful here. All right. Let price tell you what it's going to do. There is no bullish fair value gaps here. All right. Where is it going to find support? It's going to be hard. It might just run all the way down. All right. But I'm seeing shorter term US dollar strength here. I don't think it's going to make it all that way. I think we're going to get down to right around this area here. All right. And sorry, right around to the low of this candle. All right. Between this area. I'm looking for price to find support and then go up higher. Short-term US dollar strength, keeping it down. And then finally the US dollar turns over and we start to challenge the strength of this weekly fair value gap. Does that make sense? I hope it does. Wow.